Hello and welcome to this short video debrief of Budget 2021. In this video, we'll be looking at inheritance tax and trusts. I'm joined by Paul Short and John Smith-Day. As with many areas of tax, Rishi Sunak decided not to make any changes to the current rules. In fact, the only headline is that the inheritance tax nil rate ban will remain at £325,000 and the residence nil rate band at £175,000. This means married couples still have the opportunity to leave tax-free estates of up to £1 million. This, however, will now be fixed until 2026. In January 2020, an all-party parliamentary group published a report which made a number of proposals, including scrapping inheritance tax reliefs, and there was an expectation of these being included in last year's budget, or again this year. Neither have occurred. Instead, we still have the ability to make annual gifts of £3,000, small gifts of £250, potentially exempt transfers for higher amounts, and chargeable lifetime transfers into trusts. All of these give significant opportunities to reduce your estate in a tax efficient way. Trusts can be a very tax efficient way of passing capital on to grandchildren or other beneficiaries and helping to reduce your estate at the same time. If you pass income bearing assets such as property, it can be done free of tax by using gift relief to hold over capital gains, but this depends on the values. This also helps to reduce your income tax burden. Grandchildren can benefit from trust income, utilise their personal allowances and get a tax refund all at the same time.
Lucy, grandparents can be trustees and therefore they can control the distribution of assets to the grandchildren. Isn't that the case?
Yes, that's correct. A settler of a trust can also be a trustee. As you mentioned, it can help with controlling distributions. However, as a trustee, it's important to remember they have legal obligations to act in the best interest of the beneficiaries. Parents could also be trustees.
If grandparents are able to direct income to their grandchildren, which is tax-free, that presumably helps parents avoid higher marginal rates of income tax because they can keep income down below the key thresholds.
Absolutely. Passing assets on to the next generation during life has long been seen as tax advantageous. Rule changes have made this less tax efficient over the years, but we're seeing much more skipping of generations. This allows for income levels to be controlled. Parents may want to keep their income below the 50,000 child benefit limit or the 100,000 so they don't lose their personal allowance, for example. Having the income in the younger generation hands allows for the use of their personal allowances and basic rate bands. Planning for the future can never start early enough, and we can help to keep this under review and make suggestions for the short, medium and long term to benefit you and your family. We hope this has been useful, but if you have any specific questions or concerns about inheritance tax or trusts, please get in touch with myself or your usual Lambert Chapman contact.